Welcome everybody to Options Trading, brought to you by Alpha Traders. In this video, we're going to talk how options are different from stocks. Now, this is part 3 of a 9-part series. We finished off the brief history of options, which we talked about earlier. Next, we'll be taking a look at derivatives, but for this one, we are talking about how options are different from stocks. So options are so different from stocks that it's hard to decide where to begin. So for starters, you're not buying an actual stock. Rather, you're buying a contract that gives you the right to either buy or sell a stock. Now, generally, this is 100 stocks or 100 of that underlying asset. And you're also given a particular price, and that's your strike, and at a given time, and that's your expiration. Now, an options contract can expire worthless. A stock, on the other hand, would actually need to reach zero in order to be considered worthless, and even at that point, it has some sort of intrinsic value if it is a stock from a company or from a business or from an industry or that type of thing. Now, you could profit from options even when the price doesn't move at all, where stocks you can only profit from either a long or a short. In other words, stocks need a direction. If you bought AMD at $50 and a year from now AMD is still at $50, you haven't made any money. Now, where they do differ slightly is when we talk about dividends. AMD, for example, would have, let's say, a dividend where maybe they throw you a dollar a stock or $2 a stock, whatever the case may be. So you get paid in dividends. Options does not have that ability. There's no getting paid in dividends when it comes to options. But options, if you were to have a particular play on an options play that we'll talk about later in advanced options, which will be coming later in the series, you'll be able to have a contract where if AMD doesn't move too far away from 50, you can actually make a profit. So that's one major difference between options and stocks, is that options, you can actually make moves where you can get paid, you can profit on a trade where nothing moves at all. Where stocks, you do need to either pick a direction long or short, and you do kind of need to be right about that. All right, now expanding on the last point, stocks need a direction, like we just spoke about, especially short-term directional plays when not all options need a direction. So like we just talked about earlier, there are specific strategies with options that you can trade that do not require the option to move. In fact, you don't want the option to move at all. You want the underlying asset to basically stay the same. Now, stocks can rise in value with or without interest, and that's interest by means of how the market is talking. Are people bullish? Are they bearish? Is there good sentiment about that particular asset? Now, options, they can rise even if the underlying stock decreases, and vice versa. So you can have, again, an AMD options call. In other words, you're expecting AMD price to move upward. And AMD's price can, in fact, move upward. That does not necessarily correlate to your options also moving upward. If you're so far out of the money and you're coming up on expiration, then there's a very good chance AMD stock can go up and your options value can actually go down. Even though you have the correct direction, you might be out of the money, which is a phrase that we'll talk about coming up in a few videos here. But out of the money and in the money when we talk about the value of an actual options. For now, you just need to know that stocks differ from options in the case where when a stock's value rises and you're long that stock, you're making money. Stock's value decreases and you're short that stock, you're making money. That's not always the case when it comes to options. So it's something to be very much aware of. Okay, moving on to the next point here. Options can be difficult to navigate limit orders for entry and exit, while stocks are much easier to set those orders up. For example, As an options trader, you're going to be looking at a lot of different available strike rates with a lot of available different expiration dates. Each one of those strike rates for calls and puts is going to have their own specific premium to them. Now, when you're trying to set up for, I want to buy this particular option when the price, the underlying asset, falls to this horizontal support level. Well, you don't necessarily have the exact information you need for how far down that options can go. Now, when you're in the money, things get a little bit different because there is intrinsic value built in. But when you're out of the money, a lot of that has to do with interest and what's called OI, which is open interest. So, again, more things that we'll talk about down the road. But for now, you just need to know that stocks, if you want to buy a limit AMD at $49.50, you simply set the order up. If it triggers $49.50 and there's liquidity, your order will get filled. Options can be a little bit more complicated when you set those orders up for what an actual good price may be. Now, options can only be traded during options trading hours, 9:30 a.m. to 4 p.m. Most stocks can be traded their standard 9:30 to 4 window, but they also have pre-market, which starts at 4 a.m. and after hours, which goes to 8 p.m. The options market does not have that. Now, let's be very clear about exercising an option, which is not necessarily options trading. You can exercise options as long as your broker allows you to do so. So if you do have an option for, let's say, AMD again, and even though the market has closed and it has expired on Friday, you technically have until midnight on Saturday where you can get in touch with your broker and you can exercise that option instead of defaulting to whatever value it was worth towards the end of the day on Friday. But that's a conversation for another time. For now, you just need to know that these are the major differences when we talk about options and when we talk about stocks. So that'll wrap up for this quick video. Stay tuned for the next one. We'll be discussing derivatives.